Folks, another week and another freaking earnings. That's right. Got a lot of good earnings here coming up this week, and obviously, big focus here is on retail. So this is definitely relevant quite a bit because retail is going to be facing a tough time this week. If you look back at the big tech companies a few weeks back, their judgment was entirely based off of comparables. Now, these retail companies, every single one of them had incredible years last year. Comparables were incredible in 2020 compared to the year prior. This year is going to be a lot tougher for them. So we will see what they're able to do. But my opinion is, unfortunately, because these losers at Wall Street don't understand what an actual growth is, whether it be the growth over 2 years is going to be fantastic, better than any of these companies have ever done. But you know what? That's okay. We'll just forget about that. So let's go ahead and talk about these earnings. There's 3 stocks in particular I'm looking at, ones I hold, and there's definitely a lot more that I'd like to look at, but we'll just keep it with 3 today and see what we got going for us. Oh yeah, that was a nice neck crack. I don't think it translated into that, but it felt good. It felt really good. So Monday, not a whole lot in terms of my personal portfolio that I'm entirely interested in, but let me know if any of these interest you. We've got CleanSpark, UWM, PaySafe, New. Hear a lot of great things about this company. Not a company I've really looked at personally, but here's some great things for sure. Freight Car America, Do2.com. That's pretty cool. Orbital, VBL Therapeutics, Dario, and Milestone. After close, we have none other than absolute greatness in Roblox. We love Roblox, okay? I've never partaken in it, but, there's a thing about these new IPOs that you got to take a look at. Roblox stock has been doing great, by the way, but this is going to be one that's judged just as any other subscription-based company is judged. And again, Roblox isn't necessarily that. Obviously, there's microtransactions that are done within it. But user growth is entirely where we're talking. And it seems crazy. You wouldn't think there's actually user growth with Roblox, because I feel like you don't hear anything about it. You used to hear it a lot. Maybe it's just because I've gotten older. I don't hear anything about this game thing, whatever. But again, it's going to be user growth. That's where we talk about performance on this stock, which has been very, very great, frankly. Ideanomics, TME, AMO, baby. Marone Bio Innovations. A lot of these biotech companies, I'm not super familiar with them. Typically, they've got 1 or 2 drugs, one flagship drug that they're making the majority of the profit off of, or really the majority of the revenue off of. So now, I'm not too familiar with a lot of these ones that are smaller, for sure. Arshimoto, Romeo Global E, GAN, and Alkaline Water Company. Do you like alkaline water? I don't know. It's great. Perfect pH. No, never mind. Alkaline's not pH balanced. It's the opposite. It's like drinking bleach, actually. It's very basic. Tuesday is where I get pretty excited, okay? You know why? We got a lot of great companies. First, we look at Walmart stock. We'll look at Walmart's reporting earnings, and it's going to be facing a tough comp. Let's look at the performance since last earnings. I think it's worth mentioning that really right around this May period here, the stock's been up. It is up since last earnings, around 7%. So, obviously, decent performance we've seen. We've seen pretty decent performance. We can't be upset with that. You can't be upset with that. So, it's going to be hard for it to continue that trend. You look over the last year, though, the stock's only up 10% in a year in which it grew sales better than it ever has. So, if you look at expected earnings, they're expected an EPS line of $1.54 compared to a year ago of $1.56. I think they should beat on this estimate and probably grow year over year in terms of that profit line. So we've seen some improvements on supply chain over last year. So that's where I think this EPS line should be a beat because of really lower cost in terms of supply chain costs. So I think they'll beat because of that. Now, from a revenue standpoint, they're expected $135 billion, right around 136. Now, they don't give you a year over year, which I don't know why. But if you look, last year they posted a $133 billion or $137 billion line. So this would actually be a decrease year over year if they manage to hit this exact number. I do frankly think it'll be right around the $137 billion mark, which will show a rough comp. It'll be around, it could be potentially a negative year over year growth there. And the thing is, people are going to I think they're going to respond very negatively to the stock if that were to happen. I don't think they should, because if you look over a 2-year basis, this company, grew annualized revenue by better than it has grown ever. We're talking about 10% growth last year. So this year, if it doesn't grow, I mean, what can you expect out of this company? It's already bringing in $30 billion. People are crazy. They just don't look long-term, unfortunately. It's very short-term. The market's incredibly short-term now. It typically always is, but now it's incredibly short-term. So, again, tough comps are what's going to be the issue here. Yeah, so we'll take a look at that. After then, we have Home Depot, and this is another one where comps are going to be tough. Last year's home improvement craze was at its peak during this quarter. So sales were off the charts here. We're talking about 30+% growth in revenue. Are they going to be able to copy that? Frankly, I don't think they are. That's what's unfortunate for them, because it could cause the stock to show some weakness here now. So they're going to need to put up some great numbers, which I don't know if I can say they can. It's going to be tough, though, right? It's going to be tough for this stock to make it out of this in a positive standpoint, just based off of how really Wall Street's been treating these companies lately. With Huya.com after them, Just Eat Technology. A lot of these, Chinese companies, GDS here. Applied Industrial Technologies, Premier, Entity, Consolidated Water, a lot of this water, and Eagle Point. After close, if you're interested in Agilent Technologies, I know a lot of people that talk about it quite a bit. We have Lazy Boy. I'm not partaking in a Lazy Boy chair, but they make quite a lot of consumer good products. Again, tough comps on them. Let's just be clear. Last year, people were spending like freaking crazy. Best Inc. after them. America's Car Mart. Yeah, I don't know. People buy their cars from there. I don't. I never would. Cree. Then we have none other than the Krispy Kreme. You ever get there when the hot light's on? Oh, baby. When they're hot, it's like drinking donuts. You bite into it and it's wet. You could slurp it down. Just like that. Kind of gross, but they do get a little slurpy whenever they're hot, but they make some mean stuff. And again, this one actually won't be facing as tough of comps because fast food as a whole, as it went to entirely drive-through during this period, actually saw some decline last year, so it should be able to beat last year's sales for sure. Jack Henry, I think there's a action movie about him or something. Amcor, CDK Global, and Quick Logic. Wednesday after close, we have another focus stock in Target. What's Target been doing in the last 3 months here? Well, needless to say, it's been doing well. Up 24% around that time since the last earnings report. It's been some good stuff, right? This has been trading at pretty good highs here. And on a yearly basis, it's up 89%. So this is one of these that, frankly, in my opinion, we're going to be looking for a rough time. You look at the comparables here. They're expected $3.38 in EPS, which is what they put up a year ago. I do think they beat in that aspect for what I thought they would in Walmart. Same premise there due to shipping costs. If you look what they did in sales last year, they put up a $22.9 billion line, and they're expected at 24.78, which is even a growth over last year. If they're able to beat that, and I think they'll be right around $25 billion, then I think the stock can still go up. If you look, this stock, frankly, is still trading at pretty low. I mean, we talk about an 89% growth, that's incredible. But the PE ratio is still sitting around 21 PE ratio. Price to sales, it's pretty cheap. This is a company with a market cap of $129 billion with annualized revenue over $100 billion. So this is trading at a price to sales around 1, PE ratio around 21. It is incredibly cheap. So I think there's a chance that it survives the scrutiny of the tough comps that these companies have been facing. There's a chance. We'll see, though. I still like Target stock a lot. It's been a great purchase for me. Lowe's following them. Same thing with Home Depot. Their earnings typically mirror each other in terms of performance. Frankly, both companies show success and failure at the same time. So because the industry as a whole, we'll see what it's doing. But again, tough comps. TJX, Zim. I don't know. ZIM? Don't know. Analog Devices, chip maker. We're going to be talking about what does it look like for overall appearance for the market. That's what's important here is to learn how the industry's doing. As far as these chip makers are concerned, we've seen actually decent numbers from those Qualcomm, Cirrus Logic prior. Analog Devices, we'll see what they're able to post. But again, chip shortages, we'll see how that impacts this quarter and potentially their guidance. So we'll keep that in mind. Dagon New Energy. Brinker, Sharps, VIP, and a little circle ball. It's a beach ball. After close, though, another banger in Nvidia. What's Nvidia going to be doing here? Well, let's just take a freaking look. So Nvidia in the last, really since last earnings, up around 38%. And if you're looking at last year, up around 63%. So the performance has been quite incredible for this compared to really a lot of other stocks. Up 53% year to date is pretty significant. Let's take a look at some of these estimates here. Estimated EPS line of $4.09 compared to a year ago of $2.18. We're talking about nearly double that amount, which would be an incredible line. And I do think they've really improved margin quite a bit over last year. So I think this is a highly achievable number. I'm very excited. I think they can definitely accomplish this by all means. $6.3 billion estimated in terms of growth there. This is relevant. Relates to around a 39 to 40% growth year over year. I think it's a line they hit as well. I think $6.5 billion is my personal number for this quarter. Because I think they'll beat, and I think they could beat in a major way, but I'm going $6.5 billion based off what I've seen as far as the industry is concerned, and gaming has shown great numbers, so that's a segment you have to look at. Gaming is still showing numbers that are growing over last year, even though there have been incredibly tough comps, both on a console standpoint, so hardware, and software standpoint. So, again, I think things are going to be looking good for them. Nvidia, definitely an earnings to look at. Cisco, following them. Love Cisco, company I hold for mostly dividend purposes. Not really much of a capital appreciation stock, but Cisco, it's going to be at data centers. That's what we care about, data centers. Synopsys, Keysight Technologies, Joy with 2 Ys. Red Robin following them. Again, I think comparables will be a lot easier because these restaurants couldn't do in service. They were entirely working on delivery and order pickup. That really shoot a lot of people away from the business. These restaurant companies will be facing some easy comps. So the question is the market going to appreciate those easy comps, or are they going to expect even more out of them? That's what I don't know. Following them, D Local. D's nuts local. American Airsports, Vinci, and Spartan Nash. Thursday, before open, we've got Macy's, which is a company I'm shocked is still around, but we'll be facing very easy comps. Kohl's as well. So Kohl's, this is the peak time period in which clothing saw the biggest decline year over year. So clothing as a whole should be doing great numbers. Now, Kohl's is also diversified in the standpoint that it has appliances and other items in their locations, so that'll be good. But again, e-commerce is huge for them. I'd like to see what those numbers look like. I really want to know what that looks like for them because I think that's how they expand. But Kohl's numbers should be looking great in terms of comp sales. We'll see what it looks like. So we'll see what it looks like. Billy, never been to one, but well, Estee Lauder, similar story there. Tapestry as well. When you talk about clothing, Tapestry stock has been performing at incredible numbers. We're talking about 100% plus growth over the last year. Can it really meet numbers to where the market will accept that level of growth? We'll have to see. Comps are going to be easy, so we'll see what they can do. We're going to talk about Victoria's Secret numbers, huge for them. See what they're able to do. I don't know. BJ's Wholesale. Wholesale's been doing great, but again, they're going to be facing... The Wholesale faces tough comps over last year. They really will. So that's what's going to be important there. LZI, Baozun, we all know this one, okay, baby. PFG and Despegar. We know Despegar. I mean, that's a great one. Then after close, more into the chips, baby. Applied Materials. A lot of people follow this stock. Not one I've personally had aim at. Never purchased this stock in my past, but we'll see. Farfetch. He's not my favorite Pokemon, but he's okay. He does have a stick, and he's a bird, so that's pretty cool. 360 Finance after them. Ross. Dress for Less. We know that. Easy comps. Easy comps. What can I say? We'll see what it looks like, though. Atellum, Arco, and Life Vantage. And Friday, John Deere and Foot Locker. Foot Locker, easy comps. A lot of people following Foot Locker because this is a stock that fell freaking 80% last year. It was 60%, but it fell big time. Cut the dividend. Nightmare situation for Foot Locker. Gonna be worth looking at. That's what I got for you. It's a retail week. I love retail. Let's see, baby.